So tell me again how you feel now versus 6 months ago.
Yeah. So honestly, 6 months ago, I was thinking, how am I going to know what to say? How am I going to be able to have conversations and be confident, show them that confidence in that I know what I'm talking about and I'm for real. And fast forward 6 months later, it's a different ball game.
Yeah, and now you're being invited by this broker to submit an offer, which is cool. It's just an amazing place to be. Yeah. So here's the thing: you've been 6 months. You've been working with us, right?
Sure. Yeah.
Yeah, that's great. And so you're now in the game. So now you're in the part where you just got to keep doing what you're doing, and it gets a little quote boring, a little tedious, right? And you might not think you're making a lot of progress, but this is huge progress. Like being invited to submit an offer. Let's say ring the bell on that. That's cool because a lot of things had to happen for that to happen. You must have recruited a team around you, proper manager, blah, blah, blah. That the broker's taking you seriously enough. Otherwise, they wouldn't invite you to submit an offer. There's a lot of things that have had to happen to get to this point. So just make sure you don't lose sight of that you're actually making progress. Every time you do something, any small success or even a setback, right? If you don't, you submit an offer and it doesn't go anywhere. Now you were asked to submit an offer. So these are all big wins. Just keep doing what you're doing. And what happens is that first deal will become just simply inevitable.
I'm hoping for it. I'm praying.
It gets a lot easier once you close your first deal for sure. But what's the reaction been on the potential investor side?
So my challenge has been particularly that I'm abroad. I am moving back to the States this spring or summer, which will help a lot just by being close by. But it also in terms, there's two things. There's people taking me seriously, and then it's me being able to more easily demonstrate that I'm serious. Me being able to confidently tell them about this potential deal. In the earlier stages, it's about deals in general, but then it becomes there's actually a deal on the table to be able to pitch it to them. I have these limiting beliefs, like we like to call them, of it's going to be hard to convince a guy that's a friend of mine in LA about a deal in St. Louis when I'm in Israel. I've been trying to just introduce the concept to them, familiarize them with real estate investing is about. Surprisingly, a lot of people aren't really familiar with how it works. I was sitting on a plane next to this woman last month, and we were flying from Toronto to St. Louis, and she was telling me about what she does. And she started this big telehealth company. And I was telling her what I was doing and why I was traveling to St. Louis. And I asked her if she's ever invested in real estate. And she's, no, I just do the stock market. So I asked her, are you interested in learning a little bit more about what it means to invest, about investing in real estate? And she said, sure. So there I went. I made my pitch, and she had a lot of questions. She never really understood, other than buying like a single family home. She didn't really know what that meant. And her feelings were that it's a risky investment, and she just wanted to stay away from those type of investments. So I was demonstrating to her, or trying to show her the benefits of investing in real estate, and how it's, on the contrary, it's actually quite low risk. It is hard to compete with the stock market and the returns that people saw this past year. That is a little challenging.
Okay. Good job. Yes. But why don't you expand it out, right? Because your biggest competitor is going to be the stock market, right? And so why don't you go to a larger time frame? Go to 20 years, something like that, right? Or 30 years, right? If you go to a larger time frame, you will see, especially over 30 years, it averages out to 8%. Yes, it had a big run up, right? Big run up, but look at the news right now. Everybody's saying, my gosh, the PE ratios are ridiculous. We're probably overpriced. There's going to have to be a correction. So let's look at a 20-year time horizon or something. You can actually use chat for this. I was doing it the other day. The chat has access to S&P 500 over any time frame, and you simply ask them questions like, compare this to that. What about the fees, right? Take out the fees. What about the taxes on it? Like literally, there's a fees and the taxes, because we don't talk about the taxes, and there's actually management fees, right? So by the time you're making like 6% return. Oh, I'm sorry. Then there's the inflation adjusted return. So when inflation was up at 9%, did the stock market make 9% more than before? No, it's about the same, right? It's making it's whatever 8% it is, or 10% even.
Right.
But what happened to rental? What happened to rental property? Rents went up by 25%.
Yeah.
So there's an inflation hedge component. You're not going to be able to convince everybody, but what you're trying to do, what you're already doing, is you are piquing a person's interest in an alternative investment outside the stock market. Now, those investors they're going to be harder to convince, right? Because they've been set in their ways for the rest of their lives. But if you say, look, you want to make above average returns, you get cash flow and tax benefits compounded over 20 years, you're going to make way more money in real estate than the stock market. Now, you shouldn't sell everything, but start adding real estate components into your portfolio. So you can convince a lot of people to stick a toe in the water by just investing like $50,000 and seeing how it goes.
Yeah. I asked if she'd be interested in following up with her when something exciting comes on the table. I definitely didn't tell her that it's my first deal.
Did you talk about your team though?
I talked about what we have done the last couple of years. I mentioned a few months ago that my dad has a property in St. Louis that I've been overseeing and learning a lot about the management side of things. So I have that in the background when I'm talking to people. So what we've been able to do the last couple of years has been X, Y, and Z. With that in mind, I'm not just totally making, but she was very interested. She gave me a business card and she told me to be in touch with her. I set up my LLC 2 weeks ago, finally, just to have an email domain with my company instead of just sending it from a Gmail account. I plan on sending her an email this week just to say, yeah, we met a month ago. Just wanted to check in. How you doing? This is what we've been up to. Keeping you in the loop.
Love it. I love it. Do you have a sample deal package?
I haven't redone it.
We're going to need to redo it.
It was pretty good. And also wasn't the exact area. It was just when that started.
It doesn't have to be the submarket. You're just trying to get the idea across, right? So you might want to send her that. Hey, send her this first email, and then you can attach it saying, hey, by the way, here's our sample deal package. Take a look at it and let me know what questions you have. Because you want to get that out of the way so when you get a live deal, you want to have a relatively short conversation, not a long conversation.
Right. That's a good idea. Is that okay to send a deal package without presenting it? You think it's advisable just to send that over to have her take a look at it? I guess it pretty much is. She's an educated woman, pretty much straightforward.
What are you concerned about? That she won't understand it?
It's harder for me to call her and say, hey, do you want me to present this package to you?
No, don't present it. Just send it to her. Say, look, if you have any questions, let me know. Right? Because when I get a live deal, things move really quickly. And just let me know what questions you have right now. I would love to hop on Zoom with you and explain things further. While this may appear a little tedious, and it is, because you're doing it one-on-one, what you're looking for right now is repetitions with potential investors. As many people who will want to talk to you is good right now because you start to learn what they want, what they're afraid of, what their questions are. So the more of these kind of calls you can get, the better. I like how you're chatting. I love it. I would definitely send the sample deal package and go, hey, let me know if you want to hop on a Zoom call next week or something. Would love to answer your questions, blah, blah, blah.
Yeah. I wish I had that like golden tongue just to be able to let that flow out.
Nah, you don't need a golden tongue. No, you did
kind of making sure I'm saying the right things and not the wrong things.
Look, this comes with time, man. It comes with time. So in the beginning, you might feel like a blubbering idiot. Okay. And maybe you are, but you do it a few times and it becomes smoother and smoother. And also what happens is you want to try to limit the amount of questions and / objections. Because if you get too many, your investors, right? A confused mind says no. So what happens when you speak to people, you will proactively address the most common questions because you're going to get them over and over again. So by the time you're done, you're going to get very few questions or very custom or personal questions, but you're taking care of all the big ones.
Yeah, that's a good point. I guess that I feel more natural and confident so far in the talking to brokers and talking to the property management. I'm going to build that side up with the investors. How much ROI? Yeah, I have to figure that out.
Let's talk about that. So why do you think you feel more confident talking to brokers?
I feel like it's more, I know the lingo. I know what I'm looking for. I know it's less trying to sell them something as much as them trying to sell me something. Asking people is always hard.
So you're more familiar. You're more familiar with it. You're more comfortable with it. Okay. So I get that. So is it possible that you would get more comfortable talking with investors, potential investors?
So that's the hope is for sure. I guess if I've had success to like actually demonstrate, it would be more natural. Okay, this is what we're up to. This is what we've done. I haven't had that actually happen. I've done a good job with my dad's property, but not in the last year or so. So I guess there's this thing going on.
Yeah.
Get to someone that I know what I'm doing, that we've got this.
Hold on. You have your dad. What property do they have in St. Louis? What is it?
So he has a bunch of single families, and then he has this 16 unit. He's had it for 15 years and it was performing horribly. He doesn't even know, he's not involved in that. So about a year or two ago, I'm like, hey, can I check out what's going on? And we've been able to work with the property management guy. I should say I've been working with property management and been able to implement a lot of different changes, which dramatically brought the NOI up. We've been able to get better tenants in there and reduce costs. So that's been cool for me.
Why don't you just add them to your team, right? Add them to your whatever cover letter.
So you pitch it with him, meaning when I've talked with people, I do
Yeah.
mention that with my dad, but
Yeah.
I haven't indication.
Yep. It doesn't matter. Who cares? It's a freaking property. Syndication is only a legal structure. It has nothing to do with the fact what you're actually doing is buying and managing property. So it doesn't matter.
Actually, I haven't had investors on the line is what I guess I'm referring to.
Right, it doesn't. It doesn't
You're
matter.
right.
It's all about the property, right? So I would definitely mention your dad, but also then lean on your property manager, right? You got to lean on your team, lean on your property manager. Do you have a lender? Like, are you talking to a lender or two?
But yeah, I actually just contacted another one this week. I've contacted some of the referrals on the team on the program, and my brother's a broker.
Okay, so bottom line is just do it. Look, what I have in the script, just leverage your team. Don't talk about yourself at all. Just talk about your team. Hey, I'm doing this with my dad, but we got this team. We have this property manager, blah, blah, blah. And we're looking at deals. Just completely ignore your track record. It's all about your team right now. Now, you can say that you manage your dad's property. That's fair. Definitely mention that. You don't have to say that you have not done your own deal before, that you've never raised money before. Completely irrelevant. No one cared.
Right. I have been able to get, though, I have a number of small commitments.
Okay.
I have $500,000 that I could, I think, turn to from the conversations I've had with people and based on their interests in investing. I've talked with a number of people on 100,000 here, 100,000 there. I really like what you're doing. I'm going to speak with my friends when you get a deal on board. So I think I have done some in the money raising. It's not, I'm not at zero, but
you made it sound like you were at zero. Like this was the first person you ever talked to on the plane.
No, I've talked with a bunch of people. I've been talking about it a lot with lots of people. I was just saying it's more challenging for me. It doesn't come as fluent.
I see. Okay.
Yeah.
Okay. So let's talk about this for a second. Because I talk about deal finders and capital raisers, right? You got essentially two career tracks. Right now, you are doing it yourself. You're trying to do both sides. Now, I think that's fine, but I think you should specialize a little bit. I'm not saying you should stop talking to investors. You still need to talk to investors. Every general partner has to be talking to investors. But have you started doing any networking with capital raisers?
Not so much with capital raisers. I've talked to people to potentially partner with them, people that are local in St. Louis.
I haven't the capital raisers to partner with. That's what I'm saying. Why don't you start doing that?
I've thought about it a lot. Yeah, I should work on that.
Because Gary can put you in touch with, because we know who they are, right? Because when people get through their certification, we ask them, hey, what kind of person are you? Are you more of a deal finder or more of a capital raiser? So that we can focus the networking a little better.
Yeah.
I think you've got a good number of them too. We have a good number of deal finders, a good number of capital raisers. So what I'm saying is, based on what you're telling me, you gravitate a little bit more towards the deal finding. You're more comfortable with it. It sounds like maybe you're a bit of a numbers guy, whatever.
Yeah.
And talking to investors is a little bit unnatural act. Can you get better at it? Yes, but naturally you're gravitating more to the deal finder. So maybe think about that. Think about the two tracks, right? And decide one over the other. And then, because it would be much more powerful if you knew that a capital raiser had access to $1 million and then you could raise, let's say, $300,000. And between you and your partner, you can raise $1.3 million. Now you're doing a $4 million deal.
Right. I'm taking this all in. That's why I was excited to join on the call. I always need some support and reinforcing goals and I guess having that extra kick in the pants. But that's what's been going on so far in terms of the management. That's been very interesting to watch, to see what things actually cost, to see how tenants, I know the property management will be dealing with that, but I like to be able to oversee what's going on in my deal and my investors. I really want to be able to follow what's going on with them. So that's been very interesting. We turned a couple of units. I actually asked the property management company last in November if I could turn a unit by myself. In other words, I'll find my own guys. I had a guy that was a friend of mine that was going to go to the property. He sent a bunch of pictures. I made orders on Home Depot, Amazon. I called the painters, called the electrician, put up a lot of new light fixtures. We painted the cabinets instead of putting new ones in because they were good, solid oak cabinets, but the color was a little bit outdated. And we brought the rent from $675 to $900. Yeah, that was just like, I didn't even put, it wasn't even a huge turn. I didn't make it a premium apartment. It's not in a premium neighborhood. So I put $2,500 in.
That is wild. Just essentially just doing better management as a, hey, what's the actual market rent right now? Because a lot of these owners, they've been doing this for 10, 20 years. They raise the rents by nothing every year, or they don't do it at all. And they have no idea they're under market. So that's pretty cool, man. That is amazing.
Yeah, that's it. I want to ask you, like, in terms of what investors are looking for and seeking. I know I'm going to reach out to some capital raisers to work with and try to partner with them. In terms of what investors are looking for, we talked about we've talked about return, and we've talked about not offering those to investors or not bringing it up. And I definitely haven't, and I don't underwrite the deals as such.
Yeah, good.
But
That's good. That's good.
what are investors looking for? Are they looking for
So
the cash percentage?
that
You
that
know,
is the question. So I would say at this juncture, you're dealing with relatively unsophisticated investors.
Yep.
I would simply ask them what they look for, right? Because at this juncture, we're like, oh, people are looking for a pref and 15% IRR and a blah, blah, blah cash on cash return, because these are sophisticated investors and they're looking at a lot of different deals, right? So we have to be competitive. But an unsophisticated investor is not looking at a whole bunch of syndication. They're comparing it to whatever else they have laying around, which is the stock market, typically money market. You might be having arguments around some, well, I can get 5% money market. Why the heck should I get 5% cash on cash with you? Like, why would I do that? So you got to talk to people. What are you looking for? What would make you happy? What would make you buy this thing and not invest in the stock market? What kind of returns would you need? Right. And just ask them, because the best scenario is that if you can pay me 10% average annual return and 5% whatever cash on cash, like that's lights out for me. Awesome. And that way your cost of capital is much lower. So I would pull your investors in the beginning, and it'll change over time as you talk to more and more sophisticated investors. So but in the beginning, I would just pull them. I said, hey, what would get you excited? Under what circumstances would you invest in this thing?
I like that. That's quite simple, but quite exactly what I needed. Just turn it around, ask them, and engage them into what they're seeking. That's awesome. And what about, when we talk about not doing preferred return, is there a concept of giving them the first 6% or 8%, not guaranteed? Yeah, we talk about not doing preferred return because then we run into sometimes some deficiencies and stuff. What about putting it out there that you'll get the first 6% or first 8% and then anything afterwards? Meaning, is that a preferred return?
It is. That's exactly what you're describing.
Meaning, could you have a preferred guaranteeing that amount?
No, you're not. It's never guaranteed, but it's the first payment, right? So typically what happens, especially in deals right now where the cash on cash is not that great, and let's say you're giving them a 7% preferred return, but the cash on cash return is only 4%. What you do, you build up a deficiency. And if you look at the SDA, you'll see that. You'll see the preferred return deficiency. Anything with a 4% cash on cash return, and you pay out a 7 pref, you start building, you pay out the first 4%, and then the 3% basically is a deficiency. It's an IOU account.
Do I have to structure it that it's an IOU and it becomes a deficiency, or whatever comes in, you get first dibs up to that amount, up to 6% or up to 7%, and then whatever doesn't come in, obviously, almost like
you can do whatever you want. Okay, you can do whatever you want. I've never heard anyone do that before, because I'll give you up to, but I don't really know how much you're actually going to get. And someone's going to go, what the hell is my return going to be? Like, I don't know. Oh, it's going to be lower. So it's a little bit unusual versus if you say, I'm going to give you a 7 pref, you're going to, I think I can probably pay you out 3 or 4% in the beginning, and then the rest will be accrued to the end. So you'll get it, may not be to the end. Now, like, oh, okay. Yeah, I understand that. But you can do whatever you want. You can do that thing. Corey Peterson does something. He markets to unsophisticated investors, specifically IRA investors. And what he does is he does 6 and 6, meaning that he'll give you 6% now and 6% later. Very clever, and no equity upside at all. And his investors love it. They're like, I'm going to get 12% return. Now, again, the first 6% now, he can only pay out whatever it pays out. The rest goes on to an efficiency account. But in the investor's mind, they're like, fantastic. I'm getting like 4% in my whatever IRA or whatever it is. And so a 6 and 6 is very simple to understand, and they love it.
Nice. Got it. I've been wondering about that structure, that idea. But until then, I'm mentioning it. I haven't been mentioning it. I just was curious about.
And you can test the waters a little bit. You could say, what if I just paid you like interest, which is basically like a pref with equity, right? What if I just pay straight interest? Do you want upside? Do you just want equity and like no cash flow? Do you want everything on the back end, like appreciation? Do you want more cash flow maybe? What if I just paid you cash? What if I just paid you like a simple interest on your money? Like, and let's say, well, 10%. Okay, what if I pay you 5 now, 5 later? And then, well, that sounds pretty good. So you can pull your audience a little bit and play with different scenarios. It's going to be called a pref. Obviously, you're not going to say preferred. You could just use interest. I'm going to pay you 10% interest. I'll pay you 5 now and 5 later. Oh, okay, cool. That's pretty neat. What about an upside? Oh, okay, you want some upside. What I could do is just pay you 5% interest and then maybe give you 20% of the profits. What do you think of that? That sounds pretty good.
I guess as I become more familiar, more experienced, could structure and pitch it a bunch of different ways. Yeah. In terms of PPM, I was talking to a broker actually one time, mortgage broker, and talking about how to structure the numbers. And I said, yeah, for the PPM, it's going to probably cost 10 or 50. He's like, what's a PPM? He's an
Yeah.
experienced mortgage broker. I was wondering, is that something that, I was taken back because I've heard it in my readings and watchings. Like I've heard it a bunch of times. Does not everyone do that?
No. So was the broker familiar with syndications, or are you simply dealing with people who use their own money?
No, he does syndications all the time. He's a successful guy. Know him well. I was just wondering why.
That is very strange. You should
Yeah.
ask them. What do you mean you've never done a PPM before? Now, having said that, they don't really have direct exposure to the PPM, right? I mean, they should know of it or about it, but they don't have to deal with it. I don't think they don't ever have to see it or anything like that.
Here, I guess I was wondering if it's an extra thing that's not really totally necessary, or is it something that you would never do a deal without it?
No, it's not totally necessary. It's the PPM is really there to protect you, meaning that if you're going to do a deal with friends and family, okay, if the deal goes sideways, it might make for an uncomfortable conversation around the holidays, but they're not likely going to start suing you and calling the Securities and Exchange Commission. And plus, smaller deals, the SEC is not going to investigate anyway, right? On the other hand, if you start doing larger deals and you start taking money from sophisticated investors and something goes sideways, you might get sued and the SEC might investigate. And if they look and they see that you have your Form D filed, they're like, okay, looks like the guy's an idiot, just lost a bunch of money, but they're good by me. You have less thing to worry about. It's really protecting you, also potentially from investor lawsuits. They're like, oh, I didn't know that. I didn't know that he charges these fees. I didn't know this, that, and the other thing. Those things are all disclosed in PPM. So it's really there to protect you. And nothing you do will eliminate risk. It's all risk management, right? So if you do a deal and you're like, you know what, I'm not going to pay the attorney $8,000, $9,000 to do this PPM. There's no requirement. You're breaking the law, I guess, because you're selling securities. But at the end of the day, fine, but who's going to enforce it, right? The SEC police is not going to enforce a 30-unit deal, let's say. They could, but so it's up to you. Ideally, if you can work it into the deal, it's better. You also learn about it. Like when I did my 12-unit deal, I actually did it. I went through the same scenario. I didn't really have to do it. Plus, I structured it in a way that they weren't strictly LPs. Like I gave them some voting rights. So it was a kind of a blend. I didn't have to do a PPM, right? Because it was more like an LEC where they had actually voting rights. So if they're actively involved, then I don't need to do disclosure. So I did it only because I wanted to do it. I wanted to learn how to do it, and I can bake the $8,000. I think I got found attorney for $7,000, and the deal worked, so I did it. But you got to decide.
Yeah, that's cool. I've definitely been underwriting with it. I just was wondering because I had that conversation long ago. But anyway, Brad from Detroit, he's been fantastic. He's great.
Who, Brad Tiksha?
We meet every Tuesday night for an hour, nighttime for me. But he's amazing. I've learned so much ever since we've been meeting. I write up my questions every week. I just wanted to give you that feedback. He's really
That's
amazing.
awesome.
Yeah.
Brad was my first coach or mentor that I brought on. But gosh, I don't know, 2017, 18. It was a long time ago.
Yeah.
And he's helped a lot of students do deals. Like I think, yeah, he's amazing. I can't get him to ever leave his house though. Like never been to DML. He's never went to any of our live events. He just loves his family so much. I can respect that.
He's always up in his house in his bedroom or attic or wherever it is.
Yeah.
He's amazing, but he's just very patient and very knowledgeable, very skilled at being able to convey information. So that's always a big plus. I feel fortunate to have him work with him.
I'm glad to hear that. I'll let him know. It's great feedback. He's a good guy. So I think you're in really good hands. So that's awesome. Cool.
Yeah.
Well, I'm glad you're doing well. What else is in your mind?
I've been trying to work out been trying to work out when the deal comes and is in place, what those steps are. Been going through that with Brad to know when to anticipate, go through those checklists because I feel I'm getting getting closer to that. So I want to be prepared for that. I think I'm looking at having my father sign on as a KP.
Yeah, great idea. Fantastic idea.
I think that originally when we met, you had encouraged trying to piggyback on his experience. And
absolutely.
I've been trying to get those personal financial statements together to have those kind of in place. But that's what
You are making it real.
A good time to get moving on it. So
That's awesome. Keep up the good work, man. Today's is our last call. I think it was 6 calls already. How time flies. But I wouldn't mind you keeping me posted, especially when you get your deal done or get it under contract. I think anything like that. I would love to know about it.
amazing.
I mean,
Yeah.
you're on the right track, man. Keep up the good work, and it'll be even doubly awesome when you get a deal done and you're still you started all while you're still in Israel. It's going to make a great story.
Yeah, you like that?
I do that a lot. So
Hopefully there'll be hopefully I think I saw the news that they're trying to like get some sort of truce going on today.
I
So
saw that. That would be fantastic, man.
see what happens with that. We've been praying for some peace, some quiet, but get that.
Yeah, I'm praying
Anyway.
for you guys. Well, there's one other fellow I know in Israel right now, and I was like, man, it's awful. But yeah, I'm hopeful that something will get resolved soon. That'd be good. And then you coming to the U.S., so hopefully that'll go well as well.
Yeah, looking forward to that.
Awesome. All right, man. I enjoyed it.
Thank you so much, Michael. Nice catch.
Likewise. Bye. Bye.